Hey, how's it going? It's Jessey here from the Land Investing Business Secrets podcast. I've got a guest that I've had on a couple years ago, Chris Duff, and I'm excited for him to share with us what's going on, what he's seeing, um, with the market itself. He's part of his company, Serious Land Capital. He's going to talk a little bit about that and the kind of deals that they're focused on. Anyways, I hope you enjoyed this episode here with Chris Duff. All right, we've got our guest here, Chris Duff. Chris, how you doing?
Doing great here, Jesse. I know it's been about a couple years since last time we've chatted. A lot of updates within the land industry that you've been covering a lot on your pod
Yeah.
as well that have been tuning into. And just off the bat, wanted to express my admiration really for what you guys have continued to do with Pebble, and the podcast is showing up day after day, evolving as the industry goes through a lot of rocky roads here. Software is just being blown up by AI and figuring out how to implement that and survive as a SaaS company amidst all that. So I just want to
Yeah.
applaud your grit and determination for figuring it out day by.
I don't say I figured it out, but I thanks so much for that, Chris. That means a lot. Yeah, we had you back on episode 111. It was titled, "Is This the Way to Build a Life-Changing Business?" We talked back then. I would love to, things are looking a little different than it was, about 2 years ago. I'd love to sort of get an understanding of what you're seeing with the operators that you work on. So just for everybody, so they have some context. Maybe you can talk a little bit about Serious Land Capital and how you sort of get involved with land investors.
Yeah, sure thing, Jesse. So, Serious Land Capital, we are primarily an equity funding company for other land investors. Like if you want a much deeper dive in kind of our origins and, structure and how we kind of operate and think about deals, and that first interview from a couple of years ago is a great starting point, or a ton of content on our website as well here too. I won't necessarily rehash from that perspective, but as we've evolved, we've trended towards higher value deals now. So really the only thing that might be a bit out of date is just the minimum purchase price. Like I won't even look at anything that's below a $50,000 purchase price deal. At this point, I prefer a $100K plus. So we've just trended up market and prefer to operate with or partner with more experienced operators instead now, instead of kind of the pure volume game. But overall, like our appreciation for hardcore underwriting and just finding deals that will actually sell in a super difficult buyer's market across much of the country at the moment that we're recording, at least early 2026, and has been a buyer's market for over 3 years now. So when that might be changing, nobody can really tell. That's what we're doing, and so we're just sticking with what we know and trying to grow up to the highest possible level.
Hey, why the change here to work with properties that are no less than 50 to 100 to 150K?
Yeah, so we, we're very fortunate to have our best year ever from a profit perspective in 2025. We appreciate, there's been just a lot of difficulties, within real estate in general. And, there were a number of deals that we just got really lucky on and escaped by the skin of our teeth with. And I reported on this and, my own content and so forth here. And, those aren't like situations that we necessarily hang our hat on or anything either. It's like, yeah, we have to avoid getting into those situations and, be able to find a way to more reliably hit profitable results with very, very high confidence and be able to grow our business because even though we had such a great year and everything, like we still plateaued from a revenue level. And this was going after significant volume. And the thing is, I mean, our brand is, if this is the first time you've heard from us, like, hey, no brand's going to have 100% penetration. But, at this point, there's a lot of folks that have at least heard of our business when they come into land here. And, the amount of volume of high quality funding deals, and we're talking, 50% on the dollar of buys, what a lot of folks will look for, to try to hit conservative doubles. There just aren't that many, or people will really overestimate, the ability of the properties that they're getting under contract to actually sell for a double. And so, we were just finding, okay, yeah, we could still, work and do our full underwriting process on these, 20, 25, 30K purchase price deals. But when we actually take into account the profit splits and the amount of time having to dispo the property and the opportunity cost of that capital being set aside within some of these smaller deals,
Yep.
it's really hard to grow a very large company. And everybody has different goals here. Some people want to get like $1 million business, 10 million, 100, whatever. Again, my core partner, like, we are going for the gold here. We want to see how far we can take this 50-year vision. So if we have a multi-billion-dollar mindset, like, we know, hey, we have to keep going after bigger deals here if we expect to grow our business. And the amount of effort that it takes to sell a $30,000 deal compared to one that we purchased for 100 or 150, oftentimes it is the same. Not always. I would say, usually above, I don't know, $250,000, $300,000 type purchase prices. Most of those type of properties are going to be more complex on average, because they're usually going to include some type of value add or maybe entitlement, subdivision opportunities. But anything below that is oftentimes roughly the same. So hopefully that helps paint a bit of the picture on our strategy.
Yeah, I mean, so what I'm getting here is less volume, bigger properties that you guys are taking down. I mean, what does that mean generally? Is there any sort of correlation that we can sort of come from that, or conclusion that we can come from that? Like, are there just less deals in general? Like, what's going on here?
I think that's the case. Again, I wish there was just some oracle out there that you could just have, perfect set of data and understand how many, available deals there may be. We have our tendrils across the market and are connected across so much of the land industry that when we look at our CRM data and so forth, and how many deals that are coming either inbound or that we're finding outbound, it has definitely lessened over time. Is it possible that there are the same number of deals or even more, but people are just not necessarily coming to us as inbound, or they already have relationships with other funders, or they have their own capital, or they're just running everything internally. That could be the case here, but I wouldn't bet on it. I would still bet that the industry is just really difficult to operate in at the moment. I know a lot of folks will say, yeah, it's easier on the buy side. I still know, like, a lot of folks are struggling on the buy side as well too.
Yeah.
And they're dealing, again, I think about this problem all the time here, and people ask about me about this often. So, I'm trying to provide multiple variables here. Another piece is that, across the country, deal closes and wholesaling became a lot more popular. And so a lot of sellers got used to higher offers on their properties. And so the folks who are trying to buy via equity aren't having as much success there. And that leads to less funding opportunities from folks I'm talking with. Again, we'll see how this pans out. Double closes seem to be more highly regulated, where, is it going to be a viable option to build an entire business on that 2 to 3 to 5 years from now? That's up in the air. So will you only be able to buy via equity and own title in order to dispo property going forward? It could be the case, in which case, yeah, it might even out the market again, and there will be more opportunities to fund from an equity perspective. We don't know. And also, just the ability to be an entrepreneur in this space now, like, marketing's expensive. I mean, I'll still see deals people are looking for funding on for 10 to 15,000. To
Yep.
me, that's, like, again, not something I'll even look at. But for a lot of people, that's more than their entire life savings, and not able to put that together, even for smaller deals. And those ones are still being offered up here. Like, all of these variables put together are still indicating to me that there's just less total volume out there. And I think it's more of a consolidating market. I know a number of your guests have commented on this before. So, I'm just kind of sharing a few other pieces of data that we're seeing on our side.
Yeah, and it's great to hear different perspectives on things. That's great. Thanks for sharing that. So the folks that you do end up working with, are these sort of more or less distressed properties that you're working on, or is it, things that you're forcing appreciation on? But what are you typically nowadays seeing, let's say in the latter half of 2025?
Yeah, so on average, there tends to be more work required to get deals over the finish line. I'd say both on the acquisition side as well as dispo. Like, you just have to be, you have to work harder, and you have to be more creative to figure things out. Like, though, we'll take those just, easy deals any day. You just get, the perfect distressed seller. Hey, they just inherited something, and I just want to get rid of this at, again, 50 cents on the dollar, clean title, no issue. And then, it sells in an excellent area, great comps. Like, yeah, those deals sometimes still exist. We've had some very quick turnover even over this past year in a buyer's market. You can still find that. But on average, and again, I think as you trend towards higher value deals, you're just going to have to grind it out some more, and be willing to, use some elbow grease to really figure out, hey, I know a lot of land investors are not necessarily going to want to, dive in here and try to solve some of these problems. Is it always going to be like a crazy messy title situation like a Logan Fulmer and so forth might deal with? Not necessarily. We have done stuff like that. It was it was not that fun, but we still got a lot of profit out of a deal like that last year. But yeah, I mean, the headache involved to solve that is significant. So, like, you have to be open and willing to realize, yeah, what's it going to take to dive in and figure out where I can get enough alpha on these deals. And by alpha, I mean, the amount of spread and margin that I can get out of a deal compared to, what some of that lower hanging fruit that was available previously. And again, higher value deals, almost always you're going to have to figure out some type of value add or development associated with it. Or on the acquisition side, again, you might have to handle some title cleanup or various zoning changes and utility issues as well.
When we're sort of listening and we're talking about we need to put a little bit more elbow grease into a deal, could you, I don't know if you can pull something out of your hat, out of recent times here that you remember that maybe there was a deal that you guys were working on that took a little bit more elbow grease. Help us understand, not a day to day, but like, so we can really sink our teeth and get to understand like what kind of icky stuff are we dealing with? What had to be solved? What were some of the hurdles? Does anything come to mind that you could pull out of your hat there, Chris?
Yeah, I mean, these things come up all the time here. One that I'll comment on that's actually still in the works here, but it serves as a good representative example, I think, just because it's so fresh on my mind. So this was a potential subdivide up in the northeastern part of the U.S., and it was actually an on-market deal. And that's something as well that we've tried to start looking in more depth for as well, because it is a cheaper form of marketing. Effectively, is just
Yeah.
looking at on market properties. I
Mhm.
would say if you can find stuff off market, just as an aside, that's still going to be a better route on average. Even with our experience underwriting subdivide deals or potential subdivides, finding something that is going to have a 2x plus potential on market is just going to be tough.
Mm.
So they're not just sitting available for anybody to pick up if you have the capital. But this specific area, there was a really ripe deal that seemed to be roughly a X potential subdivide that was very nearby. One of the most trusted land investors within our circle. He lived in the area, has done a number of deals like this, had just, DD'd it to death. It's like, yeah, this is super, super interesting here. We're probably off on the seller by like 50 or so K. It was listed at, 500, then they cut it to 450. If we could get it like just south of 400 or right around 400, it's a
Mm.
really, really juicy deal. But there was a very problematic buyer's agent involved there, and was just hostile for whatever reason. I don't know. It sometimes you just work with all different types of personalities, and we submitted initially an offer through the land operator that we were working with. They had an issue with terms, not the price. And, so us working together, like, okay, we think this is something really solid here. They're already showing their motivation. They're cutting the
Mm.
price. Like, why didn't they take you guys offer here? So like, and so this is where the creative thinking comes in. It's like, okay, let's utilize our LLC. We already know that we're going to be partnered here. Let's use us as another buyer to come in,
Mm.
submit another formal offer, and we can almost play good cop, bad cop, utilizing our LLCs here
Wow.
together as partners and see if we can get the seller to at least come to the table for one of us. And so we submitted another one in there. That one was rejected out of hand, but they never sent any formal rejections. It was just verbal, which is not really how it's supposed to go when you're
Yeah.
dealing with on market properties here. And so, again, a lot of people would just give up at that point in time. But again, when there's a lot of money on the line, you potentially hundreds of thousands of dollars, and deals are not 2x deals are not easy to find. It's like you
Wow.
have to go to every length to really explore, especially something that I've spent hours doing due diligence on. Like,
Yeah.
make sure you squeeze every last bit of juice out of it. You got to show that tenacity to really explore things and figure out if you can make it work. And so then I went back to the land operator and was like, we don't know what the seller's really thinking here. Like, they're clearly motivated. They have listed their property on the market. They're trying to sell it. But what's going on with this buyer's agent? Like, maybe they're just hostile for some reason. It's some type of ego trip. Maybe the sellers are hostile too, but we don't know. So, like, at this point, they've kind of disobeyed the rules of an on market listing. We know we have to play by the rules initially here, but is it worth us now trying to go directly to the seller and just figuring out, hey, we submitted a couple offers here. We're willing to take this down in less than 30 days, to develop this property out. Like, are you willing to play ball? It's entirely possible the seller is hostile as well, and they, tell us to beat it. We don't know,
Yeah.
but that's actually currently the part of the process that we're in right now.
Wow.
I'd say it's still very unlikely that we're gonna make that work, but that just serves as an example of, okay, if plan A doesn't work, here's plan B, here's plan C, and you keep going until it just becomes unreasonable to go any further for a particular project. But the core lesson here is, like, dive deep and, again, really, really squeeze every bit of juice that you can out of it to try to dig up that gold that's at the end of the rainbow.
Yeah, I guess you also have to find the fine balance between is there enough spread for the amount of work that you put in there? And I guess you're telling me, properties no less than 50K is really the where you sort of draw the line in the sand type of thing.
Absolutely right, Jesse.
Curious, and how long has that been going on for? So people can get a perspective.
Well, yeah, we're recording this start of February 2026. So this was just before Christmas,
Oh
rather.
wow.
So yeah, it was listed right around then. Yeah, so a bit,
Yeah.
over a month. Not
Okay.
a crazy amount of time, I'd say. Like, some of these acquisitions that we've done, and again,
Yeah.
anybody who's been in this game for a while, like, can probably name some of these stories. But like that messy title I mentioned earlier maybe 5-10 minutes ago,
Yeah.
that probably took close to 9 months to
Oh,
close, something like that,
okay.
and we sold it right away,
Oh wow.
amazingly. But, yes, some of these times, like, you just really have to just, like, stick with it. Try to keep your hard costs as far out as possible.
Mm,
Like, I would still rather invest as much sweat equity as you can
yeah.
before putting money down. Sometimes you can't avoid it, in some of these deals,
Yeah.
just to keep it alive and keep the ball moving forward. But that
Yeah.
would be my other lesson there, which I've definitely made mistakes on in the past, of putting money down too early, and then you're running a net negative for something that isn't going to go anywhere.
Total offshoot of a question here, but what would you say is the percentage of properties you guys take down that are like on market deals?
As far as ones that we've done, I mean, it's sub 5%.
Oh,
Like,
okay.
we are, so just because, again, a lot of our results and the confidence that we're able to speak about our decision making is because we've made those mistakes
Right.
prior. And
Right.
you just have to be so cautious purchasing on market properties, particularly if you're not doing any value add to
Mm,
them. Because so many people might think, hey, like, I can get, a slight discount, or this thing was just
right.
listed, it's already below the market here. Oh, the problem is that even if you purchase something really quickly and you think you might have a bit more superior characteristics, that might be the case.
Mm,
But the market is smart out there, and a lot of the buyers agents and regular folks on the street, looking at land, they will oftentimes, they're going to look at the listing history, and they're going to see, whether it's in a disclosure state or a non-disclosure state or not, to be able to see the end purchase price. They're going to be able to see, hey, this thing was just listed, just sold, now it's back on the market again. Like, that is a black mark on a property, and you're
right.
not able to avoid that when you're buying on market here. Like, you have to play the game, you have to have the title switch, so you're already putting yourself at a disadvantage when you're working from that perspective. Again, of course, if hey, I just bought this property, we're going to install a full septic system, we're putting a well here, we're clearing out an area for a house. That's a totally different story.
Sure.
If you're kind of transforming the property entirely here, but if you're just trying to do a flip, we are so cautious about doing that.
Thanks for that heads up there. Now, since we last spoken almost a couple years ago, what other sort of challenges have you guys come across that kind of stick out? In again in the last few months.
I mean, probably just like everybody else, dispo, like selling properties, it is just really tough right now.
Mm.
And again, not all of them, but I wish like I had, even though like our track record, it speaks for ourselves and we boast industry leading operating margins and so forth. I mean,
Yep.
we try to be as transparent as possible about that because, we get the reps in, like we are good at what we do. And nevertheless, like there are still plenty of times that we struggle and second guess ourselves, and properties that I think might have more variance on the exit, are going to take longer to sell, actually
Yeah.
are the ones that sell faster. And some that I think are, all the data points are indicating, hey, this is in the most superior piece of land, like our buy price is solid, we're already undercutting the market, it's going to work, and then it's just sitting for much longer than expected here. So
Yeah.
uh that the market is the ultimate mirror. It will always give you the correct feedback regardless of what your hopes and dreams might be. So you just have to be willing to adjust and stay alive to learn from your mistakes, and hopefully have built in enough margin of error to not get stuck with something that could potentially net you a loss, or even worse, put you out of business, which
Yeah.
is a real risk nowadays when we're in the toughest real estate market overall since at least 2008, 09.
Yeah, yeah, for sure. Now, the last time we spoke, you were also working on a software product as well. I'd love to dive into that a little bit, working on a different project. What was that like and where are things? So that's with was it Land Pricer?
Yep. You've got that, Jesse. So, this is something that I've kind of spoke and written about at length here. And like, if you want to check out like some of my writings, probably our biggest piece of content people follow is a weekly newsletter, Serious News. You can sign up for free on our website. So if you want kind of the full story there, you can check it out along the way. But the goal for this particular software was just to take our manual process of underwriting
Mm.
land deals and turn it into software effectively, and to remove the art from reviewing land and deals, and turn it into a science. And we made tremendous amounts of progress along that pathway, and ultimately, you know getting the pricing as accurate as we could do it manually. Like, we just required more and more data in order to get this done. And still, it is feasible to do. Uh, but ultimately, as the amount of resources needed to take that vision to a reality, and the complexity just kept going up and up and up. I mean, you work on software yourself. Like, I'm sure you can speak to all of those technical challenges, and it's like, yeah, as soon as you think you have your product ready, it's like, oh my gosh, there's just a million bugs, and the user feedback is just not what I thought it was going to be. I ran into every possible hurdle that you probably could for in early stage software startup, that I really wish I would have known 2 years ago.
Yeah.
But now I feel, yeah, at least experience to comment appropriately on. But the main thing that we really ran into over the last 6 months or so was that, me running two businesses, it was just, it was too much. And again, I speak about this at length in other forums, my own podcast, newsletter, etc. But really had to, come to the conclusion, and after speaking with other mentors who have ran two businesses and exited and so forth, and like, they had the experience and said, yeah, it was a mistake in the past, that they would have just done one business and had an even larger exit and so forth. Or being in Las Vegas at one of the Alex Hormozy events, and he was like telling so many of us, yeah, just do one business, just do one business. And it's like, oh my God, yeah, I needed to hear this literally like 100 times in order for it
Yeah.
to fully come in, to for my mind to actually realize it. And so I could kind of see, like, if I continue on this pathway of running the Serious Land Capital and Land Pricer business, together, like it's going to cause a slow death of both.
Both.
Like that is an inevitable result
Yeah.
here.
Yeah.
Some people say, yeah, maybe you just didn't have the tenacity or resources or whatever to solve it, or you can just work harder. Okay, fine. But in my case, like I had to say, no, you know what? I have to be willing to live with the decision that I'm going to make here. And if I'm just going to pick one business, like I prefer the Serious Land Capital business. It has far more momentum. I, you know, just prefer the day to day better. It's something that I can work on for the rest of my life. The potential from a monetary perspective is at least as high, probably slower. I mean, software, like it's the fastest if you can get it off the ground. But had to come to that conclusion. So it's like, okay, let me figure out another operator team to come in here, if at all possible, to take Land Pricer to the next level. And to make a longer story short here, yes, I was able to have the CTO that was working with me come in, bring in another CEO, and right now they're having very high level discussions with appraisal companies at the moment, going for more of an enterprise play.
Yeah.
And I'm just impressed by the Rolodex and the vision that they're bringing to the product that even exceeded my own for Land Pricer. So the lesson here is, if you're willing, to listen, or in a similar situation, like sometimes again, you have to be like myself and just learn the hard way and spend a whole bunch of time and money um, in order to come to this conclusion. But if you can just focus on one thing, like that is by far the best possible thing you can do for your business. And
Yeah.
if you are willing to move on from your other opportunity, or potentially fill the role that you had with other people who can
Right.
allow the company to flourish, then that is the best next step to take here. So that's the current status at the moment. Hopefully that gives you a bit of the summary.
Yeah. No, I appreciate that. I was a little worried there. I froze and I couldn't hear you, and I was like, I hope Chris is going to continue to talk. So I missed about 5 seconds, but I think I got the gist of it. And I was just going to add, I was in a very similar position when I first started as a land investor, and back in 2019, and then it's sitting on the sidelines during COVID, seeing how everything was popping off with land and trying to get Pebble off the ground. That was very painful, and I wish I had the insight or the knowledge, or someone like Alex Hormozy telling me stick with one business, because at that time I was sitting there wondering, am I making the right decision? And I'm glad you sort of echoed what I had thought, but it was also very painful to sit on the sidelines. And again, I wish somebody had told me, but appreciate that, Chris. Any bold predictions you want to make here, as we're in 2026, the beginning? Do you still have a full year here? Anything you're bullish about, or anything that you want to share here? Land has been challenging for a lot of people who want to get started. For there have been a lot of people who have left the business as well. But any thoughts here?
Yeah, I mean, bullish. What, like long term? I'm as bullish as can be. Like I don't think you can be an entrepreneur if you don't have just that inherent optimism and just hope for the future. And like feel like I probably spend 80% of my just brain time in the future anyway. Like I'm just I think a lot of, if we're talking about the visionary integrator types, like I'm definitely far along the visionary track here, and just again trying to pan out a 50 plus year vision for our company. And I only say 50 years because, I'm in my mid 30s at the moment when we're recording. So I'm kind of going by normal human lifespans, but who knows, maybe we're all living till 150 or 200 down the line anyway. So in which case, hopefully I'll be able to do this for much longer than 50 years as well. So that's only the soft cap, so to speak, at the moment. So, I think the opportunity within land and real estate in general, like it is infinite. It's the largest asset class in the world. Again, I mean, you can look at the numbers. There's something like 300-400 trillion dollars worth of real estate all across the world. At least 20 to 25% of that is within the US alone. Again, if you only need to just carve out the tiniest sliver of that to live the life of your wildest dreams, like that's what it takes. Like real estate, so long as we're not all living in the metaverse or whatever, it is always going to have some type of value, and you're
Sure.
going to be able to arbitrage different opportunities and be creative, regardless of what the market is. So I want to put that out there. Shorter term, I'm still more bearish as far as where we're at. Macro wise, again, we've been in a deep buyer's market since mid 2022 here. And
Yeah.
if you look at the current data, like it's only trending more towards a buyer's market. I haven't seen anything
Mm,
that's you know, looking like it'll claw us back out of that. I know interest rates have dropped a little bit and so forth too. That's a whole nother discussion. I think on average, just prices for real estate in general have to come down more from the home side itself. Yeah, some land as well too. Land is correlated, not always one to one with homes here. Again, overgeneralizing it, it's hard to wrap up the entire state of the macroeconomy within a few minutes.
yeah.
But, yeah, that's my overall view is that with the advent of AI and, impacts on the job market and, higher unemployment, just the continued unaffordability of, real estate and homes, in general, um, and just the lack of buyers out there. And again, remember that land is a luxury product. Like
Mm,
again, even a $5,000, $10,000 piece of desert dirt out there, like
yeah.
that is a significant amount of change for a lot of people. Like when you consider that, close to I think 40 or 50% of the U.S. Don't fully quote me on this, but you can Google it. Couldn't afford a unexpected $500 bill. Like a lot
Mm,
of people are just not sitting on liquidity
right.
to purchase. And if financing is expensive, that they don't have net assets, job market is tough here. It's
Yeah.
mostly the top 10%, top 1% who own equities in the stock market, which is still riding more of a bull run, and the AI stocks and so forth. You have to consider all of that and where are your buyers coming from? Or are we all fighting for that, shrinking number of buyers, particularly within the land space?
Right.
So yeah, I think over the course of 2026, I'm still more bearish. I would rather be sitting on cash and only pursuing the absolute best deals out there versus trying to do more volume and like having the best year ever. If we
Yeah.
do, great. But I am just playing it so tight internally here. Because in these down markets, like cash is king. Because then, if the distress rises, you're able to strike just like so
Right.
many folks were able to do after the GFC as well here. And, if it takes 2, 3 plus more years in order for, the, buyer sellers market to even out or start turning into a seller's market again.
Yeah.
Nationally, it could take that long. It's harder to predict. Again, real
Yeah.
estate is local, street by street. You gotta do your own research. You can't look at everything too broadly here,
Mm.
but hopefully that kinda paints a picture as far as, what we're thinking about currently.
Chris, appreciate you sharing some of your insights here and what's been going on with you guys behind the scenes. And you're not really behind the scenes, but you've got a podcast, you've got a newsletter. I think everybody can find you on seriousland.capital. You can find /newsletter or /podcast. They can find you as well. And I guess if also people want to work with you guys, and they've got something worth looking at, they're going to also be able to go to seriousland.capital. I'll make sure to include that in the show notes. But anything else that I should make sure to mention here, Chris?
No, I think you hit all the key points here, Jesse. Again, it's always a pleasure to speak with you, and again, a fellow entrepreneur who's just figuring it out day by day here. You're the type of folks that I look up to and admire, and we're all trying to win together here, and looking forward to the next time, and hopefully an easier market. But if not, we'll keep figuring it out along the way.
Exactly. All right, Chris, thanks again for coming on.
Absolutely, take care.